Well, thanks, guys. Thanks for coming. A few people are kind of joining in, but we'll start with some intros. Appreciate you giving up your Wednesday lunchtime to talk about forecasting, not the sexiest of subjects. But it is very sexy when you get it wrong and have to deal with the consequences. So appreciate the timing. Just as a quick intro, I think I know quite a few people here, but for those who don't, I run Growth & Company. We advise companies on growth and investors. We can help them hire, and we can run a community and events like this on a regular basis. I've worked in growth marketing for 17 years. I used to run the growth team in a business called Graze, and I did 2 budgeting cycles with Graze. Once we got it pretty decent, we did a pretty good job, I would say. The second time was a disaster, and spent an entire year staring at red numbers on a dashboard, fielding very difficult questions from the board, people not getting paid bonuses, and general chaos. And after that, I took budgeting much more seriously. So it's great to be joined today. We've got a CMO, a CFO, and a founder, and so some interesting debate between the three of them in terms of their different viewpoint. So we have Frankie Deane, who's the SVP of Growth at Monica Vinader. She was ex-Sweaty Betty and Gym Group. We have Laura, who is an ex-PE investor, so it's kind of seen the other side of the sort of other side of the coin in terms of reviewing models from potential investors. Is now a CFO of various different startups. And Verity, who's been sort of poacher turned gamekeeper in terms of a long history in marketing at Amazon and Snapfish and other businesses, and is now a founder and is now an angel investor and a NED as well. So some interesting kind of dynamics of those three and the kind of different groups. So if we kick off, let's start off with a sort of slightly lighter question. What is some of your kind of horror stories of forecasting? Let's start with that. Do you want to go first, Laura?
Yeah, many. Some of which are probably too painful to relate in a call in front of people still. But I guess from a sort of funny point, a point when a commercial director turned to me and said, "I've seen unicorns more real than that EBITDA," was a memorable one. I think the one that was the most painful was, and it's something that I think we'll talk about because we're a group of people who, want different things out of a budget, was a situation where in a previous company, we were going into a year that we knew wasn't going to be like the previous years because some stuff had changed, and we thought we'd messaged that to the board. And, we'd got the sales team behind a budget, which was below where last year was. And the board was not very happy with that, to the extent that they brought in consultants to investigate my ability to model a budget, which was, I found, quite offensive. And they gave my modeling a clean bill of health eventually, but that was probably my worst one that I'm prepared to talk about.
Sounds like there's some ones for the pub later. What about you, Frankie?
Yeah, I think my biggest faux pas is when I was working to a different budget. I think we're going to talk about the number of versions that exist at some point today, but when I was working to a version and the merch team were buying to another version, and therefore I thought I had to sell X amount of leggings and they bought Y amount of leggings, which resulted in a challenging year, given that we can't turn around the buy within that time period. So that was a big one. And then I think more generally, for anyone operating in a business that was impacted positively or negatively by COVID, forecasting since then has been incredibly challenging, particularly in terms of new customer acquisition, and where the relationship between e-commerce and physical retail is still adapting, I think, to what the new norm looks like. So it's been a challenging couple of years on that front as well.
Yeah, certainly has. What about you, Verity?
Mine was around allocation. So I was in a very large corporate, and they changed the allocation so that certain costs, sort of operational costs within the marketing team, like training, recruitment costs, travel, things like that, were being put back into the team rather than some sort of magic other part, except nobody told us. And so as a result, we had a big hole, and we had to actually cut our hiring growth, because obviously we still need to deliver our numbers against the marketing spend that we said we would have, but it's the other bit of the budget that just simply wasn't there. So everybody just had to work a bit harder and do two people's jobs to cope with that mistake, because I don't think our manager even understood that change, and therefore wasn't looking for it and hadn't checked our numbers. So it happens.
Sounds like some issues of alignment, which we'll talk about in a sec. So obviously we're in a volatile world. Is forecasting a waste of time? Like, what is the value of forecasting? Do you want to take us first, Laura?
Yes, I would say that, but I think we can all agree on that. Like, a budget does a lot of different things to me. On a very basic level, you need a budget for cash planning, like where you have a pot of money that you will make from selling things. How much money will you make from selling things? You need to figure that out. Where are you going to spend it? Then if you kind of take that up a step, if you know that you're going to spend it to generate things, you can start to then think about kind of capital allocation. And then I think it starts to maybe get slightly intellectually interesting, which is, if I have all this money that I'm going to put into things, and, you know, marketing and growth marketing in particular really comes into its own here, where am I going to put the money? If I have £50, am I going to put it all on, I don't know, Google, or what? Where will I get the most bang for my buck, and what will that give me? And then at a more sophisticated level, which is the way that I think business should try to operate, a budget should be a distillation of the business's strategy, sort of for that particular period. Like, what are we trying to achieve in terms of our goals, our objectives? You know, as part of our 5-year plan, what's the stat we're going to make this year? What does that mean in terms of the numbers that we need to do on a very basic level? We'll talk about this a bit more later, but numbers are also a really good way that most people can understand to kind of get a business around a strategy. So I think it's a really important kind of component point of that. So that's kind of the way that I would approach it if I had to argue for the existence of budgets. What do others think?
Good CFO argument. Frankie, do you want to go next?
Yeah, I think I have a similar approach to Laura on it, to be honest. There's like the functional side, which is, you know, if you're in a physical stock business, you need to know how much stock to buy to sell, to hit the budget that you're talking to, and you have to make those decisions well ahead of the period in which you're selling. So you need a budgeting process to support with that, as well as cash flow management and investment and everything else. I think there's the other side, which is about communication and transparency to teams. I think budgets can act as an incredibly motivating thing for people, and making sure that everyone's getting behind a number, because it's easy to understand and it's easy to communicate, is super important. And then I think the other thing is, and maybe you'd argue that these conversations should be happening outside of this process, but I think often they don't, and this process therefore serves as a good purpose for it, is Laura made the point about investing in, like, should we put it into Google or should we put it into something else? Sometimes those decisions might be different based on what you're solving for, short term versus long term. And so having the conversation around investment is helpful to have both the short term budget and the longer term plan in place, so that you can be solving ideally for the 3 to 5 years rather than just the 12 months. So I think there's a few different reasons to do it, even if you ultimately end up with a slightly more accurate version of a wrong number, which is what a budget always is.
Good description. What are your thoughts, Verity?
Well, as a founder, I mean, forecasting is, you can't get out of bed without it. You can't speak to investors, you can't raise money, you can't understand your runway. So, you know, it is absolute bread and butter. Obviously, it's about managing expectations. So, but in the startup world, the challenge is that you've got other founders who are kind of creating interesting, imaginative forecasts, which VCs may or may not believe, quite often they do, and particularly female investors tend to be a little bit more honest, or perhaps less exaggerating with their forecasts. Yeah, so you get into that situation, but it does, it crystallizes the driving factors. It helps people understand whether it's your investors or investors you're trying to get, or your senior team, or your the people within your team, so that they can understand what their contribution is to the overall result that's going to make the business a success.
Okay. So, sounds good. We'll talk about the kind of rolling out at the end, which I think is a really important part that we often miss. So in terms of getting started, like how do we get started? Let's assuming we're kind of starting from scratch. Like who are the right stakeholders? How do we kind of start how do we start putting something on in an Excel sheet? What are your thoughts? Should we go Laura on this one?
Yeah, sure. So I think it's really interesting to have this conversation with a group of, I think, marketers and business leaders, because you're probably a group of people who'll be very aware of the duality and the kind of multiple stakeholders in a budget that Frankie alluded to. As a finance leader, I'm kind of thinking about when I'm building up a budget, there's the Excel bit of it, but there's really an Excel sheet is an Excel sheet. It's the assumptions and the set of assumptions that drive that, and the outputs that gives, that you need to kind of make sure that it lands with two very different sets of stakeholders. One of which is kind of the leadership team, and then cascading down from the leadership team, so your kind of internal audience for that budget. They want to know what they can spend, and depending on the department, what they have to earn. They will want generous budgets and low targets. Then you have the kind of senior leadership team, or the board, who will have sometimes a completely different perspective on the thing, which is they will want to know how much cash we will generate, or in a startup type scenario, how much runway does this give us effectively? And they will want tight budgets and high targets, and hence situations like an EBITDA that resembles a unicorn. So you have to, if I was to think about the process, the way that I like to run these things is a sort of a dry run from finance with input from the leadership team, which goes to the leadership team for some sort of sign off before we start to cascade it upwards. In practice, with timings, I'm sure we're all experiencing, if you have December year ends, some of that tends to get compressed. But I'd be interested to see how the other panelists approach it.
Yeah, sounds good. So Verity, in your experience, have you done sort of top down, bottom up? Like how do you sort of approach that?
Yeah, so I have one of my favourite memories of working with one of the founders of Snapfish. I launched it in Australia, New Zealand, and we were in a Sydney shopping centre. We'd obviously done some site visits and things like that, and looked at some competitor shops. And then it was time to start the forecasting. And since he's there in Sydney with me, we're damn well going to do it now. And I remember sitting on a bench in a shopping centre with laptops, and he taught me how to do forecasting, and I still use it now. And the approach was, you start with top down. You start with what do we think we can achieve? What's our big number? And then work down to see how we can achieve it. Then you put that to one side and you do bottom up. You take last year's budget, you add your growth numbers, you increase your CPA a bit, you improve your conversion, and add some new product categories and all the rest of it, and up you come. And then the third step, because this was a triangulate process, was that you step back, it's not as yourself, but somebody from outside the business or from a different business unit, and go, does this make sense? Do I believe this? And do those three scenarios match, or are they close? Because if they're not, it's not going to work, and you've got to start again and figure out where are you putting yourself, or where are you not being aggressive enough, or something like that. But if they're within 10% of each other, then you can go, all right, we're probably on the right path here. Now we can refine what we've got. So that was a very useful piece of training I got.
And what are your thoughts on that, Frankie?
Yeah, I think I totally agree. Like top down, bottom up, perfect. I think typically top down gives you a bigger number than bottom up does, and that's actually really helpful, right? Because top down is usually a desirable number that you're looking for, hence it's top down. And the bottom up piece gives you a little bit more of maybe a realistic or conservative perspective. And I think both are helpful because it helps you to balance risk and opportunity, but it's also helpful to know how wide the gap is between those two things and why it exists. Like what is the reason? And I think back to the post-COVID point, if you took a pretty top-down approach from a business that had done very well, an online e-commerce business in COVID, then you would continue to see a nice straight line of growth. But when you then look bottom up, you would see that means that next year you need to acquire 500,000 customers with a CAC 20% lower because your conversion rate was so strong, the pent-up demand, et cetera, was there during COVID, which is clearly completely unrealistic. And so I think it gives good governance to do it in both ways. And then I also think the market maturity piece is helpful as well. So if you're operating in a number of markets, or if you're a new business, doing bottom up is quite hard because you don't have any of the numbers, and so everything is an assumption, and that becomes quite difficult to do. And it's the same if you've got a mature market versus a very new market. The mature market is going to be relatively predictable versus a more volatile expectation on a new market. So I realise it's maybe not that helpful to say that both are best, but I think that is the case, and it's worth the time.
I think you can also have a situation where your kind of leading indicators are quite different from what your budget was. So your conversion for last year might have been a certain number, but it's much lower at the moment, and that you don't kind of pick that up when you look at a top-down view.
Yeah,
a useful way. Okay, sounds good. And in terms of, I think we've all been there. It's version 16 of the budget, final version, final. This is definitely final. How do we stop that process getting out of control? Like what is the right approach to do that? I keep leading with Laura, but I'll lead again with Laura. But Laura, what are your thoughts on a bit of discipline around this?
The really basic, obvious one is it has to go to the board by a certain point, and working backwards. I mean, that sounds really obvious, but an immovable, immutable deadline in the sand, which allows you to kind of do that. I think, and then making sure that you, going back to a theme, but sort of alignment between departments around what needs to be true when. In the organizations I've worked in, this is a process that's typically been driven by finance, and making sure that finance is really clear about when they need stuff from people, and being realistic about what it will take to get that kind of turnaround. Making sure that you build in time for the disagreements about what looks like a unicorn versus an actual hittable target is a helpful thing that I always try to remind myself to do as well. And also, I guess, a recognition, depending on the culture of the organization, about what the budget's trying to achieve and over what point it needs to be right, and at what point we can revisit. So in an ideal world, I'm trying to reforecast at least twice within a period, so you get that opportunity to revisit these numbers. I want clarity on what you think you can do for the next 4 to 5 months, and then I understand that things will happen in those 4 to 5 months, which mean that month 5 to 6 onwards, we'll get an opportunity to look back again. Again, something that good finance functions should try and make sure that they're having that dialogue with the respective bits of the business to give them that clarity. But yeah, I mean, the super basic one is it has to go to the big boss by this date. So by then it will be done.
Work backwards. And Verity, often there's dependencies within a forecast. So you might have a product launch or a new market or some sort of thing that's going to happen. Like, how do you kind of think about getting alignment around the forecasting process?
That is the really big challenge when you're in marketing or operations. So much of your dependency is on product and launching, as you say, a new country or a new product category or whatever. And so you tend to get in this sort of chicken and egg role, and it's simply not possible most often for the product and tech teams to be able to sort of put a stake in the ground and say, yes, we'll deliver this by this. But equally, it does force that conversation to say, well, okay, but if this budget is dependent on us doing that, what do we need to provide for the tech and product to give it the very best chance of being delivered on time. So you start to unpick those dependencies, because I think once people are aware of them, and if you're not doing your marketing and operations budget in a silo and just making assumptions about, oh well, they, we'll be in France by June, it'll be okay. When if the rest of the business is not completely clear that, okay, and there's 5 million revenue in Q3 that's dependent on that being delivered. So I think that's again part of the expectations and the alignment. And I think it's also worth having, for the teams that aren't delivering those product pieces, to be able to go, okay, if this is late, or if it doesn't deliver in the way we hope, what are our options? What's our plan B? Do we have something we can fall back on? Is there a way that we can deliver at least some of this with additional resource rather than with the technology or whatever it is? So it's working through those pieces as well. So obviously that's where it comes beyond just a financial plan and comes into, as Laura was saying, a strategic plan, and working out, well, we still need to deliver this thing. What are other options for doing it? Think about it now rather than a month before it's supposed to launch and it's too late.
Yeah. And Frankie, like, obviously as you said, a deadline, it does get people focused on it, but ideally they would be focused on some of these things before. Like, how do you think about getting your kind of ducks in a row before the kind of 11th hour of a budget?
Yeah, well, I'd throw that question out to the group. If anyone knows how, please let me know. I do think with a budget process, and I'll be interested to know if Laura may disagree with me on this, is particularly in my kind of role, I need to be like delivering the numbers today, as well as thinking about the numbers for next year and however long budget we're looking at the long-term plan. And so I do think that there's an important part of the process, which is an upfront alignment between your kind of like growth and finance leadership on what is the expectation from me as part of this, because I can do 1 million hours of analysis to try and justify whether something will increase by 1% or 2%. But I think there's some value in applying like Pareto's law to it to some degree as well, in that I need to also run the trading business now, and especially now, right? If you're doing a budget now, your finance team, I think, would prefer you to be spending 100% of your time focused on delivering Black Friday versus worrying about the budget. So I think that is a really important step, and it's where the relationship between growth and finance is so critical. And I would really recommend like working on developing that if you haven't already. And then I think on the dependencies piece, the thing to watch out for is that, like, we all have a kind of operational plan that's come out of our strategy, which is we're going to do these 10 initiatives that we think will deliver, each one will deliver X, Y, and Z. And some will be really big, some will be small. And what you don't want to do is assume that all of those things will happen, because they won't. And also, even if they did, some other things that you haven't thought about will go wrong in the time period that will be a headwind for you. And so I think it's always a judgment and a balance. There's no exact formula to it, but it's definitely worth spending some time on your operational plan and saying, how confident are we of this? How much data do we actually have to inform these things? And which ones do we really want to get behind and all hold hands collectively, not just like the growth or product team, all hold hands and say, yes, those things we feel confident are going to come through, and therefore we will put them in the budget. But the rest of them are kind of BAU testing and optimizations that great if they come, if they don't, we've learned something.
Yeah, I think it's the sort of the best growth leaders I've worked with, it's a conversation rather than an ongoing conversation, I should say, rather than something that we pick up on the 25th of October for the next year, because it is a constant, growth metrics in particular vary dramatically during the year for all sorts of different things. So it's something that constantly needs sort of understanding and assessment by both parties. And yeah, understanding that has been a really powerful thing for me, and working with people who've helped me understand that. I think the other things that sort of work to that a bit is that every budget has a bit of flex in it, or should do, so that there's a bit of kind of there'll be a place, I wouldn't say to hide, but to ensure that experimentation and latitude, good budgets will give space for experimentation and latitude, because that's how businesses often grow, right? It's not, very rarely has a business, found its, inside lane of the motorway and is cruising along at 80 miles an hour, and all you have to do is add gas. There's always going to be opportunities to do stuff like that. And then the final point, yeah, I totally agree with you, Frankie. It's the best use of operators' time to be operating and running the business, rather than spending time in analysis paralysis. And I think, yeah, the best way I've seen work is making sure that you're just having that conversation throughout the year. So there's a good understanding in the finance team of the metrics you're working to and why you're working to those metrics. Don't just expect that because they also speak numbers, they understand the numbers that you're working to and why those numbers are moving. I think that's where I've seen it work best.
Sounds good. So obviously the world of startups, highly volatile. How do we think about measuring or kind of understanding some of that volatility? I think we sort of touched on a little bit of that before, but Frankie, what are your thoughts around, do we kind of put in tests that we haven't run yet based on assumption? Like, what should we put in? What should we not put in? How should we kind of think about that?
Yeah, it is tricky. I think if you go off like a general rule of, say, in like the digital product space, like to get one test to do well, you probably need to run 8 to 10, right? So I think if you've planned 10, don't plan 10 to win, plan 1 to win and the rest to lose. I think where it becomes a bit more challenging, and that's also like, you've got to differentiate between BAU. So like, if you did nothing next year, your business will probably go down, right, versus staying flat. So there's got to be a component of, everyone has to continue to get better just to stand still. And what is that how are you going to differentiate between us just getting better to stand still, and then what are we layering on top of that is giving us growth? And so I would categorize most of your kind of operational day-to-day CRO programs and email sophistication and personalization and all that sort of jazz into BAU. And if you outperform BAU, then perfect, and you start to see some lanes that you can really drive into and put some resource against, then great. But then separate to that, you want your kind of your bigger strategic initiatives, whether you're like, I don't know, opening physical locations or expanding into different categories or markets or price points or whatever. That's where you will probably face some pressure to put some of that benefit into the budget, rightly so, because if we don't believe it's going to do anything, then why are we investing in it in the first place, would be a question at the exec, I guess. And at that point, I think you do have to put it in. So I would go for a subtle, like, you're always going to have a low, medium, high impact for something like that. And I would argue as much as possible for the low. And to Laura's point, I'd like a bigger budget and a lower sales target. That's what you should start with.
Aim low, score high. And Verity, from a sort of founder's perspective, what are the sort of scenarios that you would think about in terms of things that you'd put in a budget or not put in a budget?
Yeah, so obviously you're working with a lot less information to start with, so that sort of extend out from last year thing doesn't really work, because obviously everything is new. But what I would, another thing that you get in founding in startups is that founders tend to have a bias for optimism, so they tend to build budgets that are particularly optimistic. That's the nature of being a founder. If you're not optimistic, you're not going to be risk averse enough to be able to jump in with both feet and risk your livelihood. equally, the expectation of delivering against your budget is different within a startup. So when I was at Amazon, for example, we were expected to come in within 1% of our plan. And if we didn't, then we were in a lot of trouble. As a startup, if you come in within 20%, 10 to 20% of your plan, you're doing really well. You've forecasted well, you've grown well, because remember, you've had huge pressure to put a very big growth forecast in to justify the raise you've done. So if you actually come to within 10 to 20% of what you said you'd do, then that's a real vote of confidence, because there are at least 10 other companies alongside you who have not delivered anywhere near the forecast that they put in. So it's, you know, the things that you're taking into account and having to pivot are your fundraising, your runway, your cash flow position, and exactly Frankie's point about running those tests. Just keep running the tests and hope that, you know, one or two of them are going to deliver and compensate for the rest. But obviously you're doing it with a tiny team, but equally it's exciting because nobody's done it before. It's a startup. You're kind of laying the tracks as you go. So as long as you're happy with that environment and that ambiguity, the opportunity to pivot is great. And it's, you know, and you don't have to worry too much about breaking the BAU because you haven't really got that much BAU. So that's what's exciting about it.
Nice. And Laura, from a finance perspective, like how would you think about kind of scenarios and base case and what should be and not?
I mean, there's two answers to that. There's the what I do and there's the sort of how you do it. So the what is as a finance person, and it's not necessarily something that you give to the team, but budgets are an exercise in expectation management for all of your external stakeholders. And so often the way that you bridge the gap between those various different versions of the truth, which are all true in terms of the ambition of the founder, the ambition of the board, what's realistically deliverable based on what we can see now, is you will present some sort of, I tend to present a base plus a mid and a stretch, as in if we're reasonably lucky, we'll get here, and if we're very lucky, we'll get here, which gets the ambition on board and all of that. That I should say, for the avoidance of doubt, particularly when I've worked in early stage startups, I agree with Verity, and I'd possibly actually go further and say the thing that people care about is runway. And so hitting your revenue target is great, but if you're pre-revenue, it's sort of made up anyway. So it's more about, you know, how long do you have to prove out your thesis and what is your thesis, and being really crisp on that. And also then just making sure that you're getting ready to fundraise because you've hit your, you know, you've given yourself enough latitude in the metrics that you say that you're going to try and achieve, such that you hit those by a point at which you can then go out to fundraise for the next step. So I think that's the first thing I'd say is sort of, you know, 2 points, which is the making sure you have a base, stretch, and a mid, and then also being really crisp around sort of what it is you're trying to achieve, and making sure that you bring your stakeholders on board on that. So that's kind of the external bit. In terms of the internal facing bit, and how you then turn around to the marketing team or whoever it is and say, you know, this is loosely what we've told them we're going to do. Good luck. Ideally, you've worked together to kind of build that up, and they're comfortable with that level of ambiguity, and maybe excited, as Verity said, by the fact that they will be laying the track and going out into the wilderness and doing stuff. What I've also found helpful is being clear that as finance, what we care about is the North Star, or the sort of the next level down from the North Star, but not about how you get there. That's for the growth leader in the organization to own. And that's Frankie's point around tests, like working sort of, you know, we will want to be optimistic by nature and think that you can improve CAC by 20% every year, because why can't you? And it's for the growth leaders to sort of make the case calmly and cogently, and that's the value of having that ongoing conversation during the year, so that, you know, you have the latitude to kind of get to the target through your own means, experimentation, etc., without too much interference at this level, but everybody's clear about where it is you need to go in terms of number of leggings sold or whatever, because those are the numbers that then fit into the budget.
Okay, nice. Yep, makes sense. And let's say we've written our beautiful budget. How do we then think about communicating that to the wider audience? How does that kind of translate into kind of practical progress on the ground in terms of objectives? Do you want to give us that, Verity?
Yeah, sure. So ideally, we haven't really sort of talked about this too much, but ideally you would kick off the budgeting process with pulling the team together, getting everybody galvanized, lots of excitement, brainstorming, exploring all the, giving a bit of an idea of this, this is the sort of growth we're going to need to achieve in the next year. So let's brainstorm how we're going to do it. So everybody's got buy-in, everybody's had, got skin in the game. All sort of rattles up and then it rattles down again. And one of the first, I would say, always use OKRs, because they help individuals understand how does what I do contribute to that, us delivering our North Star as a business. Because if people don't feel that ownership, it's difficult for them to buy into that. And when things go wrong, it's easier for them to hold that, kind of go, well, I'm doing my bit, I'm okay. But they need to know that how it all fits together. So that would definitely be my suggestion. Do an inspirational piece at the end as well. So similar to the first one, doing one other at the end saying, okay, we've discussed this and you came up with these lovely ideas and this is how it is now looking and here is the plan and this is why it's really important. The other thing that I would tend to do is I get people to get closer to if they're marketing, get close to finance get close to marketing. I find that it's really good if you give people access to the numbers, particularly if they're from sectors maybe like customer experience, where they're not so familiar with the numbers and they don't really, they don't get to see them all the time. You just have a simple dashboard. So for example, at Good Life Sorted, which is my company now, we match up helpers with elderly people with vetted helpers in the community. And so for the customer experience team, it's about booking in that first visit, because if you get a first visit, the helper goes to visit the person for the first time, it's free. The conversion from there is very, very high. So if we have a daily dashboard now that the customer experience people can see how many first visits are being booked in, and they're obsessed with it. They're refreshing it all the time and they love it. So having that sense of ownership and just rather than kind of getting to the end of the month and just putting up a dashboard and going, okay, this is what we got, actually seeing it all the time, because it really does motivate people and help them to understand how the difference they can make. The final point I would make is that I like matching up finance and marketing people, because quite often, dare I say, Laura, finance people are quite often frustrated marketers, and they like to tell you how you should design your ads and things like that, which is great. And equally, quite often marketing people tend to not have the grasp of numbers that you would probably like. And so by matching up people at a sort of mid-level and helping them sort of, perhaps the finance person can help build a model for the content person to understand how their performance is working on their social channels. And equally, they can explain, okay, this is why I chose this content and let's look at how it performed. So I would really strongly recommend that sort of buddying relationship. It really works.
Nice. Creative accounting is where the two match, right? What are your thoughts, Frankie? What's going to work well in terms of like getting teams aligned around a budget?
Yeah, I think transparency is key. So I definitely like to I would take my team through like the whole budget and give them insight to a large majority of what goes into it. Clearly not things that are sort of personally sensitive and stuff, but so that they learn and understand the dynamics of the business. And most growth marketing people will understand the revenue line, and as you go down the P&L, they will understand less and less as you go down. And I think it's critically important, particularly if you're working in a more growth focused role where you might have P&L accountability, to understand the dynamics and the levers and the sensitivities that exist around some of the numbers in there. I think for the broader business, it's really important to be able to simplify a budget into maximum 5 numbers. And that's going to be different based on what your business is and what it sells and who it sells to. But like for our business, which is a consumer omni-channel retail business, ours are like super simple. It's like, how many new customers do I need to acquire? What do I need my 12-month repeat rate to be? What do we want our customer satisfaction score to be, what's our average order value, and what's our CAC. And I think if we can hit all 5 of those numbers, we strongly believe that the correlation, or actually the causation, is enough such that everything else will work itself out. And if everyone does their job of managing costs and everything else, then we will hit the numbers that we need to. And then if you can repeat the 5 numbers all the time in every forum, we actually, when I was at the gym group, we used to start every meeting with those numbers. And you would circle, I think we had 8 at that point, you would circle the one that the meeting was most in reference to. And it was really useful to help with like meeting management. You know, like you'd really challenge yourself by going, oh shit, this meeting actually is not in relation to any of those things. Then should we be having the meeting? Like it's kind of it was quite an interesting management piece. But yeah, it was repeated all the time, so it drilled into everybody. Everybody knew those numbers, which was super useful.
Yeah, what gets measured gets done. I mean, OKRs are beautiful for that reason as well. It often takes a bit of pain to put them in, but being able to take a dense spreadsheet, which is built on a series of assumptions, right, at the end of the day, and crystallize that into the assumptions that actually really matter and will really drive things and can be moved, and give those to people to work with is how it should be done. I think the right level of transparency is like two further points. I think it's very empowering for people to understand how the business they work for makes money on a very basic level. So I think trying to communicate that to people in a way that makes sense and to Verity's point, sort of energizes them to do what they need to do, is really important. I think, and I would say this, but too much financial transparency can actually drag on that sometimes. So it's about making sure you hit the right level. So on a very basic level, I think we'd all agree that it may not be the most productive thing if everybody knew what everybody else was paid, for example, but it is probably very helpful if you know what your sales targets are, or the amount of leggings that you need to sell to hit those targets. But giving people latitude, so what I really like about Frankie's example about, those key numbers, giving people latitude to hit the key numbers, not everything is prescribed, gives people a bit of sort of freedom and agency to go out and achieve. So I really like that.
There's also, sorry, just one other quick thing, Joseph. There's also something to be said for sometimes ignoring the budget and the forecast, like especially at a time like now, right? The teams are under an enormous amount of pressure to deliver a financial number, but they are not in control of a large contributing variable as to whether they achieve it or not. And so I like to, I'm hot in the moment of telling the team, like we can only control what we can control. And so long as we manage the inputs, regardless of what the output is, like, frankly, at this moment, it doesn't really matter to us so long as we are managing what we can control. And so I think that relationship between having numbers and being very numbers driven and growth mindsets and everything else, but also focusing on inputs over outputs in terms of our day-to-day operation is helpful and kind of liberating sometimes for teams under pressure.
That's great. So final question, and we'll put it out to the wider audience for a Q&A. Outside of the sort of budgeting period, like how should finance and marketing teams work together? I think we should start with Laura on that one.
Really basic. I think we've talked about it a couple of times, but make sure that you are talking on a regular basis. So I would always have a standing agenda catch up with the sort of respective heads of department on a monthly basis, depending on the level of reporting in the organization and the size of the organization. We'd be reporting their P&L to them on a monthly basis and making sure that we're checking in on all of that kind of stuff. And I think, making sure that you're speaking to these people well in advance and communicating clear deadlines around what you need to know and what needs to be true for you to reforecast or forecast and budget in the first place. which in itself translates into reasonably continuous and hopefully positive contact. But I feel like that's all quite basic. I'm sure Verity and Frankie will have more sophisticated thoughts.
Okay, who wants to go first? Do you want to go first, Frankie?
Yeah, sure. I think it actually is quite basic, right? A lot of that is about relationship management, and it is the most critical relationship I think in the business. So it's worth putting time and investment into building trust between the two. I think a couple of things I've definitely experienced in a positive sense is that it's helpful to bring finance into your problems, like not from a I just want to sit and rant all the time type approach, more of a like it's hard to find growth, and sometimes it's really, really hard, and the numbers don't change because the budget was set and it is what it is. And we're all only human, and we're all trying to kind of do our best job, and if the trust is there and the relationship is there, then the teams will believe that is the case, that you're assuming positive intent. And so I think bringing finance in early when you're getting leading indicators to things being challenging, or equally things being very positive, in which case you want to say to them, hey, can you free up some money because this is looking good and we might be able to spend some more. And that is really important. And then on the flip side, like I had a fantastic setup with our commercial finance partner in my last role, and they acted as they were kind of constantly trying to find money in the business for me to spend. And I was thinking, wow, this has really got to the best place ever. I'm not asking. They are believing in what we're doing, and they're seeing the results of what we're doing, that they are actively trying to find money in the P&L to unlock more investment into this space. And that as a partnership is like a dream place to get to. So yeah, I would aim for that. Haven't got to it yet again, but working on it, work in progress.
Nice. Anything to add, Verity?
Yeah, I mean, I sort of mentioned just before about sort of buddying people up, but I would agree with Frankie. I have not had a bad experience with finance. I find that finance is a wonderful team, and they're just really smart people. They're on your side. They want you to deliver, and they want to do what they can to make it happen. And so I would say that if people have had experiences of finance people being a bit more of a blocker or of a hindrance, then look at the relationship, look at why. Because I would say I have never had a finance team be other than supportive, kind of you're there to help you do the best possible job you can, like Frankie's saying about they want to see the growth, they want to help you deliver, and they want to understand if and why that's not happening. And I don't think I've ever had it where they've gone, you're at fault, it's you are not doing your job. I've never had that. So I would say, it's the dream team. Get it to work.
Yeah. It can be tricky when you have sort of corporate finance people. I've seen a few situations where obviously a lot of businesses set a marketing budget for the year, and the majority of startups you're trying to spend as much as you possibly can at your allowable CAC, and it's kind of a different way of thinking. But yeah, it's nice when you have that relationship and they're like, how can we spend more rather than how can we manage our budget? Brilliant. Well, thank you so much for that. Let's open up to the audience. If you want to say it out loud or stick it in the chat if you have any questions or comments. Manfredi, let's go with you. You're on mute.
Hi, thanks for all the helpful insight. I wanted to ask you, so something you mentioned at the start briefly, how do you cater for the years ahead, right? So for example, one big variable is payback period and predicted metrics. And so that's actually where I found some kind of conflict with finance, where they say, well, these are the numbers, we want revenue numbers. And you're like, yeah, but actually the activity of marketing we're doing today really has impact in next year. And so, for example, for most companies, they should actually probably, for some companies, turn off marketing now, because it's not going to impact the 2024 numbers. So how do you manage that?
All good investor-backed businesses will be should be somewhere operating to a multi-year model. So, you know, we're focusing on 2025 and what does that mean at a very granular level. But whenever I do as I am doing my 2025 budget, that is a 24-month budget with, you know, basically sort of tapering effectively if we win no further work, etc. So we can think about runway. So it's about, on a basic level, tapping into that thinking in your finance function and making sure that they're fully educated about that longer taper curve, right? And yeah, if there's depending on the sort of acquisition profile that you're working to, making sure that everybody's really understands that. I mean, it was a big learning for me when I was like, but why not in month? You know, when you have to, it took a data lake and you know, a series of tables and all of that kind of stuff, but I eventually got it, and then we got on the same page. So as I think we've already said, like making sure that you're spending time with your finance team so they understand the metrics that matter to you and why those metrics matter, and also making sure that, you know, your finance team and your leadership are making you aware of what they're trying to do over the longer period, so that your strategy I'm sure you're fully clued in on it, but your strategy is aligned with that, right? You know, you're thinking about the longer term, as should finance.
I think this is also where, depending on your business, where like a customer driven model is helpful to combine with a more financially led model. So we will often, when we talk about bottom up, internally, we're talking about a customer forecast. So, and it's not based on opinion, it's fact, it's a model. And so I know that if I acquire X amount of customers this year, I know already, based on the predictability that you outlined, Y% of them will come back and buy next year. So they make me no money, some revenue and no profit this year, but then they fall into my existing customer line next year. And so to Laura's point, the multi-year approach, I think, helps you to visualize quite simply in a table, X customers at Y cost gives you revenue and contribution, some revenue, no contribution. And then you'll be getting some revenue and contribution from your existing database. But then next year, those numbers look like however they look. And depending on how much you're investing into acquisition, the dynamics between the two will shift over time. But even now, you know, we're a relatively big business with quite big investors, and we still have these conversations now. And it's a really, really critical part of the budgeting conversation is the customer focused model to help with that.
Even more with brand advertising, I guess, because the impact is even more lagging.
That's exactly the point I was going to make. That's the hardest bit to convey, to get across, is, okay, if I invest, you know, half my budget in brand now, then in the medium term, that should lower my CAC or my performance channels. And in long term, it should catapult me into a much stronger position in the business, in the space, in the category, so that I've got a bit more land grab. But I completely agree. And you need all your very, very senior founders and investors board to be on board with that, because of course, you know, invest $1 today, get paid back in 3 months. Who wouldn't? But if the vision, you know, is that we're actually going to, you know, we're going to own this category, we're going to be first, then you have to invest in brand. And that's the bit that you need to try and convince people. And quite often founders do get it, but it is scary, because usually you're taking a big chunk of what they've just raised and going, yeah, I'm going to put it in brand and I think it's going to be great. You know, so it's a really tough call. Equally, test and learn, because then if you can shorten that, you know, that uncertainty, and, you know, show that, yes, I'm still bringing some sort of structure and to this big chunk of money that I'm putting in, then that does give people some confidence that, okay, well, we're heading in the right direction, rather than waiting a year and then thinking, well, that was a waste. That's how I'd approach it.
Sounds good. Any questions? Who's next?
I saw there was a question in the chat.
Yeah, should we take that one? So to follow up on this, Verity, how do you go about convincing them on the value of brand? Any success stories? on what metrics, insights have worked well in the past? Interesting one.
Give me a minute. Yes, absolutely. I'm sure I've got plenty. You have to. If you don't, you are just going to be another transactional company that's out there fighting with everybody else. If you have any ambition to be, be the leader, then you have to put yourself forward. But equally, you have to have raised enough money. The number of companies that I see that have raised maybe, a couple of million, and they've got this massive marketing budget, and and they're going to go, oh, we're going to be number one, or we're going to do this. You're not going to do that with your little marketing budget. It costs a lot of money, particularly in the consumer space, to get to that position. So you need your founders, your investors, and your runway to allow you to do that. Equally, having said that, there are ways that you can do it that are, that not big budget. You can own a space. I'm trying to think of some of the brands. I'm sure, Frankie, you can probably think of some really cool brands at the moment that are doing really, really interesting stuff differently, that isn't costing a lot of money, but is very impactful. And that comes down to being really, really creative and owning your niche and, understanding your customer and absolutely going laser focused for that customer and then building out from there.
Yeah, I think, the brand versus performance debate is a whole nother webinar, right? I have thoughts on that. I don't think the two are different personally, but I haven't yet found a metric more helpful than Google Trends to try and give you some leading indicator as to the fact that what you're doing is generating some interest in your brand, which I think is what we're all trying to do. So I know that there's a shift in consumer behavior with people using TikTok as a search platform now more than Google and everything else. So we need to keep our eyes on that and adapt. But I think it's the best one, and there's enough research out there to show that there is a causation between Google search trends and share of market growth. And it's free and it's easy for any business to use, and it's a relative measure, and you can see it against your competitors or other categories or whatever else. So personally, that's probably the one that I would go for. And then I would clearly communicate, you have like your kind of financial metrics associated with any marketing campaign. And then you have these, what I have like 4 or 5 sub metrics, of which one would be Google search trends. And then depending what it is, it might be like traffic to site or whatever. And if they are giving you positive signs, then I think you should feel confidence that this number is going to come in. If they're not, then you probably need to adapt. But yeah, it's also not all about how much you spend. It's about hiring really smart people who understand your customer and are willing to like innovate and fail and try new stuff, especially now with what's going on with social and other forms of media.
Nice.
I'm struck with what Verity said around sort of finances being frustrated marketers. I think we'd possibly be the worst marketers in some senses, but an element of what we do is the numbers, and we keep time on the numbers. But when we're thinking about budgeting and making strategic decisions around capital allocation, which is maybe one of the more intellectually interesting bits of being in a finance function, there is an element of storytelling to that. So maybe there is communality there where and I view brand investment in that way, right? It has to be logically presented. It has to be, there has to be a flow to it. There have to be ideally things that are measurable, but also maybe an acknowledgement that this is not take a pound, put it into X advertising and get 50p back. This is a bit more of an investment in something longer term and appropriately delivered to the respective stakeholders with that creativity, with the individuals and all of the things that you said. That's when I've seen those conversations go really well. But yeah, it's not growth marketing. And most people know that, but yeah, it needs to be treated as such, and it needs to be given that latitude to a certain extent, I think.
Nice. Sounds like we've got our next webinar sorted. Well, we're at time now. Thank you so much to the panel. Really interesting insight. It's really great to hear your different views, and thanks everyone for attending. We've got a recording, so we'll send that through just so you have it and you can give it in front of your in finance team. Yeah, thanks so much, guys. Really appreciate your time, everyone.
Thank you.
Cheers, guys. Bye.
Have a good day.
Thanks,
Bye-bye.
bye.